Good morning, all. Welcome to Siloam's 9M 2025 earnings call webinar. I'm Vivian, the Investor Relation of Siloam Hospitals. With me today, we have Bu Caroline Riyadi as Siloam CEO, Pak Daniel Phua as Siloam CFO, Pak Sumanta Ray as Siloam COO, and Pak David Utama as Siloam President Director. Without further ado, let's start the webinar.
Vivian. While Vivian is putting the slides up, I just want to say a few words. Again, thank you all for your continued support for Siloam. We do believe that for Q3 of 2025, it is a very pivotal month for Siloam. Basically, it is the month whereby we pivot back towards the growth pattern that we have been experiencing. I think if you have heard me share previously, one half of 2025, year for year, like for like, we were basically comparing against a very high base in 2024, whereby there were seasonality factors that should basically even itself out by the second half of 2025. And I think we are seeing that happening. You have heard me share about the challenges of corporate insurance in regard to the discount. And we are finding that those have largely been resolved as due to the hard work from Sumanta's teams as well. And therefore, we should see a lot of those tailwind supporting the growth for Siloam going forward. But no less, I think the other key point was in the first half of the year, we also went through some transitional costs as we implement what we call our archetype, or what we call the network strategy now, in looking at segmenting our hospitals into premium value seekers and community generalist hospitals. Again, those transformations have largely been done, and we are seeing a lot of positive results coming from those transformations, of which Sumanta will share about it later on as well. Vivian, if next slide. So yeah, so looking at the result for 2020 Q3 of 2025. But you will note that revenue Q on Q has grown 7.8%. EBITDA has grown 20%. Yeah. And most importantly, you see that EBITDA margin is now stabilized back to the 30%, which is always the guidance that are given to the market in terms of what we aim to strive for in regard to the EBITDA margin. So the EBITDA margin has improved, as you can see, from 27% in 2Q25, now back to the 30%, which is kind of more consistently what we have been doing in regard to our EBITDA margin. Net profit now sits at 321 B, a 45% improvement upon the quarter before, yeah, and reflecting a 12.5% margin. Again, this reflects a quarter whereby, again, we're moving away from the seasonality factor, but at the same time, we were also impacted by a number of external events that were really unforeseen. Yeah, for example, the demonstrations that happened. We had quite a number of hospitals which are located in the red zone. So those had a significant impact on the performance of our hospitals. And after the demonstrations, we had the Bali flood. Now, as you would know, Bali is always a key growth center for us in regard to the 3 Bali hospitals that we operated there. So the Bali flood did have an impact on the performance for those units during Q3 as well. Combined, those external events we estimated would have had about a 50 B impact on the EBITDA performance for Q3 of 2025. In addition to that, we obviously still have some of the corporate insurance issues that I spoke about earlier, yeah, whereby I explained to you that due to excessive discounts or excessive outstanding accounts receivables, we were forced to discontinue certain insurers. Now, those issues have largely been resolved as of Q3, and we have reopened accounts. Now, but obviously the ramping up would still take a bit of time. I mean, for the ramp up of the volume for those insurers, but very happy to report that if you look at the Q on Q growth, corporate insurance is basically the largest growth segment, contributing about 10% to our growth. That shows you that the corporate recovery, corporate insurance recovery is in motion and would continue to carry us through to the 4Q and obviously 2026 going forward as well. Now, if we were to normalize or exclude those external events and so forth, Q3's revenue would have grown about 12% year on year. So at the moment, revenue grew about 6.7% year on year. But if you were to normalize for those external events and impact, it would have grown about 12%. Now, when we looked at October performances, is very much reflecting that trend as well. Yeah. So that the normalized 12% growth, without normalization, we are seeing that same pattern of growth being realized in October as well. And we believe that this momentum will continue to carry through Q4 of 2025. So that should give you some idea, I guess, in regard to the ending point for the year. The other key point that I want to highlight is that we are also very excited that in addition to the pivotal turnaround, as I say, for Q3 of 2025, there are also quite a number of growth drivers that we are very excited to share with you. But for example, one of them is the Gubeng extension for the Surabaya hospitals. Kara will talk about that a little bit more later. This is basically a brand new building next to a very well-respected Siloam Surabaya hospitals, which is in a prime locations. It adds another additional 162 beds. It is basically an advanced care centers with very advanced and specialized treatment and equipments. But now, the key point to note is that, look, 162 bed extension, yeah, so to speak, is really like a new hospital, is a greenfield, yeah. But we do not need to suffer from the ramp-up period that we usually experience from a greenfield, because basically it is a building that is right next to the current Surabaya hospital. So we can leverage off the reputations, the doctors that is already there. So the ramp-up would be in a matter of months instead of years compared to a greenfield. But once it's stabilized, we do expect Siloam Gubeng or our Siloam Advanced Care Center to contribute close to 100 B EBITDA a year. But you know, the hospital has opened in October, and we will be doing a grand launching in November as well. I mean, if some of you could join us, we're very excited about the project. It is the example of our key flagship premium hospitals. It looks very different, but if you were to visit compared to our current hospitals, and it really pivots the new directions for Siloam, whereby we want to continue to focus on growing our acuity and also on the premium segment of our hospitals. Outside of that, there are other growth levers we are looking at. We are also actively looking at a project that we call Go Beyond, in looking at adjacent revenue. Again, Caroline will share that with you a little bit more. One of the examples is, for example, the Senayan Clinic. But that would the Go Beyond is an initiative for us to continue to look for services that would further complement the hospital healthcare services that we provide, in order to provide a more complete value chain in regard to the end-to-end healthcare services that Siloam is able to provide Indonesians. Sumanta will later on talk a little bit more about the archetype, or now we're calling it the network project now. We have been talking about that every quarter to you. We're very excited to see that a lot of the target that we wanted to hit in regard to the archetype strategy is bearing fruit. For example, we are seeing that the premium segments are continuing to grow in acuity. We are seeing that, for example, the corporate insurance growth is became a focus for the premium segment, whereas we see that the community generalists continue to improve on their margin, on their cost management, and also on their BPJS management and so forth. So we are seeing a lot of those operational improvements, which are going to carry Siloam through to future quarters and future years as well. And very last, I shared last time, we're still looking at the M&A. We've evaluated over 30 targets. There's another 30 in the pipeline that we're evaluating. We do believe that we want to return to a stage whereby we do look for growth. And whilst we still have greenfield hospitals, we also want to balance that with acquisitions and brownfield. So that is an active arm that we are currently carrying on as well. So all in all, I think a lot of exciting activities happening, a lot of growth levers, a lot of kind of operational excellence improvement that we're seeing in Siloam. that we're very excited in terms of what 2026 will bring in regard to the performance going forward. Okay, next, Vivian. So this is what I touched on earlier on. If you were to look at the corporate insurance growth, 3Q24 to 3Q25, that grew by 10%, right? Whereas BBGS decreased by 5.2%. But it's in line with, you will see that growth to be even more pronounced when the Sumanta share with you later in regard to what this corporate insurance segment is growing in particularly the premium segments, right? But now it's not necessarily that the BBGS is degrowing, and BBGS is growing in the community generalist segment. But as a whole, corporate insurance is growing faster, in our premium segment. So this is why, as you look at 3Q 2025, our BBGS contributions has reduced from 18.7% in 3Q 24 down to 16%. And with corporate insurance and BBGS growing and making up for the delta. Next, Vivian. In regard to throughput, throughput is stable. As you can see across the board, outpatients, inpatients, we're growing 8 to 9%, but ALOS is stable as well. Occupancy has improved as well from 62.2% in 2Q25 to 65.8% in 3Q 2025. Again, as I mentioned before, the throughput would have been higher if not for those external events that hit us in the 3Q of 2025. And with those out of the way, with the corporate insurance being largely addressed, we would see a growth coming back in the fourth quarter. Next. The ARPOB and the average revenue per patient days remain stable. But obviously, you've seen this before, we continue to be a leader in regard to revenue acuity, and it is a lead that we intend to hang on to. We are seeing that a lot of hospitals are now, basically moving towards similar directions. We do believe that one of the key initiatives that Siloam is currently doing, which again, Sumanta and Caroline will share a bit more, is to really aggressively look at how do we retain more of the negative medical tourism that goes out. And we believe the answer is to improve the range of services and the comprehensiveness and the quality of the services that Siloam provides. So that continues to be our focus. But I've said this before, we don't see other Indonesian hospitals necessarily as our competitions, but really the Malaysian, Singapore, Bangkok hospitals as the competitions. Again, there are some aspects that Caroline will share later, whereby we are actually gaining some positive medical tourism, for example, through our Bali hospitals as well. So that continue to remain a key focus in Siloam. Next, Vivian. So happy to report, the cost margins has stabilized. But earlier mentioned, if you look at the EBITDA margin, we're currently sitting at 30% for 3Q 2025. Underlying EBITDA has improved by close to 20%. And if you look at all the cost components, it's stabilized. Drugs and clinical supplies, again, stable at 29%. Operating expenses went down from 31.6% down to 30.4%. Now, remember previously I did mention to you there's some friction transitional costs as we implement the archetype or the network strategies. But those costs have largely stabilized, as you can see, coming in from 3Q 2025. And actually, a lot of those strategy that's been implemented, we do believe would really help margin going forward, because the network strategy allow us to be very focused on how we design our hospitals, how we build our hospitals in order to cater to the target segments. And therefore, the cost management can be a lot more effective compared to if we were to kind of blend it across the board. And therefore, you need to have additional costs to cater for multiple segments instead of having the costs targeted at the segment that we are trying to serve. On the very last slide from me, but cash flow remains stable, but it's flat compared to 9-month 2024. Working capital is stable as well. It is something that it allows us to then basically have a healthy cash flow to reinvest into the company. That is all from me. I would pass the time to Samantha to talk a little bit more about our network that I mentioned earlier and how they're performing. To you, Samantha.
Thank you, Daniel. Good morning, everyone. Just to carry on from where Daniel was mentioning about the networks, we have been undergoing this network transformation from the beginning part of the year. And what we are now seeing, and the quarterly results which Daniel talked about, we are seeing the benefits, the positive impact of our network strategy. So just to recap, our premium specialist and premium generalist, the two premium networks, and value seeker, which is our mid-market offering, and community generalist, which is our BPJS offering, essentially allows us to kind of have very stratified plans and activities and strategies, and be agile to the market, right? So, and we are seeing the benefits, and we have very clear strategies for each of these networks. Next slide, please. So our premium networks continue their focus on corporate insurance and clinical acuity. So these are two areas we are very, very focused on. We have seen significant growth in Q3 over last year as far as corporate insurance goes, mid-teens, double-digit growth. This is a result of all the effort we put in, especially in our premium networks, also coordinating with our insurance partners and our corporate partners to be able to provide premium healthcare to their customer base and user base. So corporate insurance has been a focus. We are seeing a result. The other part is adding capacity and capabilities. I mean, we added Da Vinci XI, the first in Indonesia, in a couple of months back. Now, this quarter, we added the first 3D mammography in Indonesia, and also reflecting the coordination and partnership with corporate and insurance. We are doing a whole set of mammography treatment in partnership with Prudential. So that is one of the things which we are driving actively with many of our partners. This is one of the first to be done. So this also helps us engage and build very strong partnerships with our insurance and corporate partners. The third thing, which is very, very important to build clinical acuity, is addition of doctors. We have been constantly driving this to add more and more doctors into the system. We have over 89 doctors we have added only in our premium network, the two premium networks, over the course of the year. As compared to last year, we have added nearly 90 doctors. And we keep on adding that because we realize that a lot of clinical acuity will depend on the kind of doctors we get and the kind of treatment we provide. So it is equipment, it is about adding doctors, and also having very strong corporate and insurance partnerships that we are seeing as key drivers of the business, especially in the premium networks. Next slide, please. To add to that, to build on the clinical acuity, we have been going very strong on global partnerships across our key craft groups, our Congo Euronephro tie-ups with NUS and Changi General and St. Luke's, and so on and so forth. The logos are there on the screen. We continue doing that. We continue expanding that, and we will keep on adding more and more such partnerships, which benefit us in terms of learning, in terms of pushing up the clinical acuity, starting newer services, and so on and so forth. Parallelly, within the Indonesian market, we continue to be the leaders in clinical summit. We did the Euronephro Summit in the month of August, and Euro Summit, which was the last of the summits, the 5 or 6 summits we did for the year, in September. Because this is an area where we get in all the clinicians, all the leading clinicians within the Indonesian market and have them collaborate with the keynote global speakers we are able to bring in. So these are becoming standalone properties, standalone Siloam properties for in itself, and creating their own kind of equity. This also helps us attract more clinicians into our fold, as well as learn best practices and have a more global exposure in terms of clinical prowess. Next slide, please. Daniel mentioned about the international patients. We all know that there is a net negative international patient flow from Indonesia. A lot of people go to Singapore and Malaysia and so on and so forth. So while we are working on that, I'm happy to report that our Bali hospitals actually bucks the trend and gets in international patients who come to Indonesia for their treatment, largely from the cosmetic center. We have had significant revenue growth and throughput growth. And for the last few months, we have been doing upwards of over 100 cosmetic procedures every month. We are also looking at adding new services. So this is one area we want to keep on strengthening to ensure that more and more international patients choose our Bali hospitals as their preferred treatment if they are coming for cosmetic and related surgery. So this has been one of the success stories, and we wanted to share this with you. Next slide, please. Now, I talked a lot about the premium hospitals. How are we focusing on our non-premium, which is value seeker and community generalist? So if you look at it, the way we approach BPJS is slightly different. If you look at our premium hospitals, the share of BPJS we have managed to bring it down by 2 percentage points by actually increasing the non-BPJS business. So it is as a share, the growth of non-BPJS and the growth of corporate insurance, which I talked about in the earlier ones, has actually resulted in a positive shift movement in terms of case mix in premium. However, for non-premium, because of the markets we operate in for community generalists as well as value seeker, the numbers for BPJs remain more or less similar. However, while we acknowledge that in these markets, in the non-premium hospitals, BPJS is an integral part. But however, we are really focused on operational excellence on these non-premium networks. For value seeker, for example, just by case mix management, we have been significantly able to move ARPOB up. So it is 12% up over quarter of the same quarter last year. And we continue working towards case mix management to ensure that ARPOB goes up. Similarly, for community generalists, through a mix of capacity expansion, operational ramp up, and controlled OPEX, we have been constantly able to grow EBITDA at significant levels. So while we really build on the clinical equity and the partnerships on the premium networks, on the non-premium, it's tight operations. It is focus on case mix, focus on great operational excellence so that it flows to the bottom line. So that's been a little bit on how our network strategy is going forward and how it is contributing to the overall organization growth. I'll now hand it over to Bukarel to take it forward for the next slides. Thank you.
All right. Thank you, Sumanta and Daniel. And thank you all of you for joining us this morning. Quarter 3 has been a very positive quarter, not just because of the recovery of the numbers that you've seen, but also because of some very exciting developments in clinical programs, expansion facilities, go beyond. I think that if we were to share with all of you everything that we are doing at Siloam, we would be here for a few hours. So we have thought really hard to think about some of the things you may be interested in knowing. But if you're interested in more of the programs that we are doing, please contact one of us and we'd be happy to share. So the first that we would like to share is on the chest pain ready hospital. So following the launch of our stroke ready hospital network, we are building a network of chest pain ready hospitals. What are chest pain ready hospitals? These are hospitals that are equipped with specific clinical capabilities, equipment, and protocols based on international best practices for timely and accurate response to stroke cases. And the objective is so that we will provide the most optimal outcome for stroke patients, including survival rate and organ recovery rate, because with stroke, it's not just about survival, it's about the quality of life after the patient recovers from the acute period. And so thus the stroke ready hospitals. We will be launching an education and marketing campaign as we did with our stroke ready hospitals. And following the stroke ready hospital campaign, we did see an increase into our emergency and stroke hospitals coming in, as stroke patients coming into our emergencies. And we expect the same with chest pain ready hospitals as well. Next is our robotics technology. We want to be at the forefront of cutting edge technology. Why? Because we want to adequately equip our specialist doctors, because we do have the best doctors and the best surgeons in the whole of the country. So we want to support them. But we also want to improve outcomes for our patients and elevate care to global standards. And therefore, we are investing in equipment such as robotics. Besides the Da Vinci Xi at Siloam, which we've shared with you, we have also invested in 3 orthopedic robots and 3 different orthopedic centers, and also the brain lab robot in our neurosurgery center in Siloam Lippo Village. Robots do improve outcomes because they are AI empowered, and they are a way for surgeons to overcome limitations of the human hand, the human eye, judgment, and therefore outcomes are better with robotics technology. And this is the direction where the world is going in. The next one is our pipeline that is on track. In the next few months, we will start operating our oncology center at Lippo Village, or the center that we are going to name MRCCC at Lippo Village, because we believe that MRCCC is not a location, it's not a hospital, but it is a movement, and a movement to invest and elevate in oncology care in Indonesia, which is a growing need because of the growing prevalence of oncology. This center will house at the beginning 2 LINACs, PET scan, SPECT, immunocompromised isolation rooms, oncodiagnostics, and multidisciplinary oncology care. We also have 2 greenfields on the horizon. The second location in Surabaya, which is City of Tomorrow for Siloam, and also Strondol, which is in Semarang, also a second location. These are 2 great markets where we believe that we need to increase our presence and where we will benefit from growth from this market. The next one I'd like to touch on Gubeng, that is finally operating our new building in Surabaya. Next slide, please. We have done, the Siloam Surabaya has on one hand done very well in this market. On the other hand, we have struggled with a lot of limitations. So that we have a lot of content in this hospital and a lot of professors and just a lot of top doctors, but with no space for expansion and development of new clinical programs. Now, the new building allows us to do both and onboard more specialists as well. We also then allow for more room for advanced technology. We've already put in a LINAC, and one of our orthopedic robots is already in this building, and we will also put in more technology. This will result in more advanced treatment capabilities, higher clinical acuity, and ultimately higher ARPOB. We are going to be doing a grand opening and inauguration on November 20th. We invite all of you to come join us. It is a beautiful facility. It is different from anything we have done before. And this will be the facility standard for our premium hospitals going forward. So we are standardizing our facilities, doing the premium and the value seeker and our community generalist hospitals. This will be the standard for our premium hospitals going forward. Next is a clinic that we are opening in Senayan. Now, where this fits into our next gen Siloam is the Go Beyond pillar. We have been talking about the Go Beyond pillar. We haven't really given any concrete updates. And so this is one of the initiatives we are doing in the Go Beyond pillar, where we want to invest and grow in adjacent non-hospital businesses where we believe that there is growth for Siloam. We already operate over 60 clinics. Half of them are primary care clinics working with BPJS, and another half of them are corporate clinics that are on site, sometimes in mining sites as well, office buildings. Now, Senayan is neither. Senayan is a new clinic model, which is a premium specialistic clinic model. So we will have specialistic services, we will have diagnostics and imaging, and we will also have a longevity program in this Senayan clinic as well. We plan to add more premium specialist clinics in other locations as well, and we will continue to update you as we do so. Last, we would like to share, very proud, we're very pleased to share that we have been named as world's most trustworthy companies in 2025 by Newsweek in the category of health and life sciences, number 24. Now, this ranking is based on thousands of surveys on 3 dimensions of trust, which is customer, investor, and employee, done by Newsweek in partnership with Statista. We are so proud and thankful because we believe that trust is not something that is given, but it is earned over years as we develop a relationship with our customers and stakeholders, proving that we are deserving of their trust. And it is the basis of everything we do with the patient, because there's no patient that comes to the hospital if it is not on the basis of trust. The last thing on the slide is a Muri record. We set a record for basic life support training of 9,351 participants. Still relatively small, humble beginnings, but another way we are sharing and educating the community, and we plan to continue this program as well. So that ends my section of updates. Again, Q3 has been very, very busy for us. A lot of developments in a lot of areas. We continue to be very busy in digital implementation of AI, quality improvement, operational improvement, and our teams are very busy. Because of the limitation of time, this is all we can share, but we're happy to share more about the things that we are doing, because ultimately, at the end of the day, we believe that these are the things that will drive sustainable growth for us over the next years and decades, really building a solid foundation for our business and operations, and also contributing to the community, which is core to our vision. Once again, thank you very much for all of your support. We are happy to answer questions at this time. Back to you, Vivian.
Thank you, Pak Bu, for the insightful presentation. Just a kindly reminder for all participants who would like to ask questions, please kindly use the Q&A box below. Thank you.
So, Vivian, I guess I'll take the first question from Gilbert Kresna on strengthening the broader healthcare ecosystem. And the short and long answer of that is absolutely yes. And that's why we have the Go Beyond pillar. Now, the Go Beyond pillar becomes very exciting because when you actually sit and ask the question, where can we expand, given the brand reputation, given the capabilities and the positioning of Siloam in Indonesia, where can Siloam expand? And that list is non-exhaustive. It's endless. And so as management, it is our job to make sure we identify the most compelling opportunities for us to do. Because the reason why we're doing Go Beyond isn't because our hospital part of the business isn't growing. We believe that there's still a lot of growth to be done and to be pushed in the coming years. And so the reason, so we're not trying to pivot away from hospitals. We need to keep an eye on our hospitals and continue to drive growth. But we want to do Go Beyond so that, precisely as you've mentioned here, so that we can strengthen our position and develop our healthcare ecosystem. So the example here, or the question here, is specifically in laboratory services. There are multiple models of growing lab services. You can do a lab retail network, and an example of this would be Prodia. You can expand into B2B and growing your test menu and growing a central factory. We can grow a lab by making sure we grow our clinical capabilities that will drive more demand for lab. So there are multiple ways of doing this. We are doubling down on lab. Hopefully we'll be able to give you more information in the future of where we're going to be focused on lab, but we are also going to be very selective on how we grow our lab services. At this point in time, we are not looking at a pedagang besar farmasi, or there's a word for this in English, which I've forgotten, like cooperative buying. We are not going into that at this moment, but as you've seen, we are starting to expand our lab and different models, in clinics, and different models for clinics. Daniel, you want to take number 2?
I can take number 2.
Okay.
Yeah. So essentially, what it's a question from Ingrid. Why absolute BPJS revenue decline because of so as it is one of the slides.
Gilbert Kresna has a second and third question.
Oh, okay. Okay, sorry.
Maybe let me just take a few of the financial questions, but because there's some duplications in there as well, then I'll pass to Sumanta to take the commercial one. First, a few of you have asked about first rate. But there's what I can say and what I can't say. A few tips. You notice that in Q1 and Q2 we did a limited review. In Q3 there is no limited review. Yeah, I mean, limited review obviously is to support the fairness opinion that needs to be announced. Now, the fact that there is no limited review for Q3 should say something. Yeah, I will not elaborate more. But I would say watch this space carefully. I think in the not too distant future you will see some announcements. But the discussion is progressing well. It is something that we've always said is important for us to do structurally as a hospital. Obviously, it will not have a significant impact on EBITDA, the way EBITDA is calculated right now. But in regard to performances, it would be kind of a business as usual. But it allows us basically a firmer certainty in regard to the future prospect of our hospitals, because we now own our hospitals. It means that depreciations can go down over time, as opposed to kind of PSA case 73 lease depreciation, where it only goes up with the increase in rental. But it does mean that over time we don't have to sustain a year-on-year increase in regard to rental. So in the medium to long term, it would have a positive impact. But in regard to Ari, some of your questions on the performance, well, I think I've already mentioned October, we are back to double-digit growth. We do certainly see that should sustain ourselves, not just for 2026, but for Q4 as well. And in regard to the EBITDA margins, a question that you'd like to ask me as well, but I've always said, to be conservative, I will still stick to my 30% guidance. there are still a lot of levers that we are currently executing to be able to improve the margin. Some of that is from the review of costs, how to optimize costs, how to basically leverage AI in managing some of our cost items. But some of those come from basically the archetype of network strategy, where we are more focused on the area of services we are at. Naturally, the EBITDA can be optimized. And also the other avenue of EBITDA margin improvement is from the improvement in acuity of services. As we go up in acuity and complexities, but naturally the EBITDA margin will also improve. We are also seeing that a lot of we're focusing growth in the higher margin businesses, for example, the cosmetic surgery and so forth. So there are multiple levers to improve EBITDA margin, but for the time being, I think as a CFO, to be conservative, I will stick with 30% is a fair target. I mean, for us to look at going forward. I would then pass back to Sumanta to talk. Actually, before passing back, Sumanta, maybe to address the third question from Gilbert about the COE before we move to Ingrid. Yeah. Overview. So Sumanta, the question is, what's the key consideration Siloam take when establishing COE in new or existing hospitals?
Okay. So essentially, we look at, and again, it is linked to especially for our premium hospitals and what I mentioned, that it is about clinical equity. It is about fairly cutting edge clinical care. So center of excellences, most of them would center around the 6 or 7 core specialties, which we have, which we call Congo UN or cardiac, onco, neuro, and then so on and so forth. So that set is the core kind of centers of excellence when we look at new or bolstering clinical equity in existing hospitals. So that is one set. However, it also depends on the kind of market where we operate. For example, Bali, cosmetic is a center of excellence specifically to Bali because it helps us serve international patients. So largely it will be Congo Euronephro. Most of the center of excellence, most of the hospitals, new or additions, will have focus on these. Some more than the others, depending on the market and depending on the availability of clinicians, as well as some cases we will have things like the cosmetic, which adds a different level of value for a slightly different market segment. So that's the kind of area where we largely operate in terms of looking at establishing centers of excellence. I will take a few commercial questions. I think there are 3 or 4 of them, so I'll take it at one go and then hand it back to Daniel. So one is from Ingrid. Can you explain why BPJS decline? Is it a result of archetype strategy? It is a result of the archetype strategy because, as you would have seen, as I mentioned earlier, 2 things. In the premium networks, our share of BPJS has really gone down from 16 to 14%. It is not about restricting BPJS, but actually growing corporate and insurance and OP. So we have been very aggressive in growing that, along with, and that's on the back of adding new doctors, new equipment, and very strong partnerships. So as a share, it has BPJS has started going down, not by restricting BPJS, but by growing the non-BPJS business. However, in our non-premium networks, like I mentioned, we still continue having similar BPJS numbers because that's the market we serve. In healthcare, you need to also serve the communities, but again, they're more focused on ensuring through strong operational excellence, stronger EBITDA and bottom line. So it is largely on the back of corporate insurance growth. Then the next question is from Tarun Bhatnagar. What is the view on mandatory co-payment rules? Whether it will be reduced or whether it will be increased? Well, we don't know at this point of time. There are multiple consultations going on between insurers and the government. It was supposed to be launched from 1st January. It is delayed. But as we understand, yes, there will be some kind of copay. What exact form of copay? Because it was mandatory copay. So I don't know whether it will remain a mandatory copay or not. That will depend on the consultations. But largely, we expect to see some kind of copay probably in some time next year. Yeah, I think that's one last question I will answer from anonymous attendee from private patient segment, which face higher growth, private insurance or corporate. It will obviously be private insurance because a lot of corporates are also moving to insurance, moving their healthcare payments into insurance rather than doing it directly. So naturally, and that's true of every market in the world, and then Indonesia is no different, and we will continue seeing those trends. Back to you, Daniel, for answering a few of the financial questions.
Just looking through, I think I've understand. Okay, so some of the financial questions, I think I answered most of it. IP revenue days, is it relatively soft? I would say it is flat. Again, those fluctuates from quarter to quarters. But in Q3, I would say Bali obviously did have an impact. I mean, there's one of the higher revenue intensity locations, and the Bali flood obviously affected the contribution from Bali, so that definitely had a relative impact on the IP revenue per days as well from that perspective. Then there was what would be contribution of intensity, price increase, and volumes. I think it's all blended. I don't think we, at least to the public, we don't break it down in regard to specifically what each will contribute. But suffice to say, contributions will come from all those areas. But pricing, Sumanta might want to talk about it a bit more. We are doing a strategic review on pricing as well, but ensuring that we have a value-based pricing approach. Some color on expansion target margin. Again, each of the expansions, we internally, I think this I can share with you, set a hurdle rate of 20% IRR. For all new hospitals in greenfield, right? Obviously, the margin payback for each of the hospitals will be different, but internally we set a hurdle rate in terms of IRR of 20% before we go ahead. As I mentioned earlier, we definitely try to focus more on brownfield where possible, where relevant. On M&A front, we are definitely very active, but also we wanted to make sure that we are not buying something for the sake of it. They do need to tie in with the hospital strategies. We do need to make sure that we can provide value add by doing those acquisitions. I think there are a few very interesting targets that we're evaluating, but it's too early for me to say anything at this stage. Yep. Well, maybe you want to answer more on the location of the Senayan clinic. It's a question on what's the exact location
David,
of the Senayan clinic. Yeah, for David.
Yeah, sure. Thank you. This Senayan clinic, like Carol had shared, is definitely a true excitement for all of us, because this is a model that we really believe that in the Go Beyond strategy, we want to play in this segment. The exact location is in the Plaza Senayan complex. We're building 1,000+ square meter premium clinic, but the excitement is the offering that we do and the specialists that are being onboarded. So we believe that to serve the proximity of Permata Hijau and that area, the number of credible specialists with different backgrounds is going to be critical, and with the facility and equipments that we will put inside, and the offering on the menu is going to be completely different, and it will really complement the hospital business that we have. so that people do not in that area have to travel to hospital to receive a similar or equivalent quality of care. So we're very excited. So the exact location is in the Plaza Senayan area. To be exact, it's Central Senayan building on the ground floor. Back to Vivian.
Yes, I think there's no further question, Pak Bu. I think we can conclude this earnings call. Okay, so thank you for our participants who have joined the earnings call, and we'll see you on the next earnings call. Thank you, Pak. Thank you, Bu.
Thank you very much,
Thank you,
everybody.
everyone.
Have a good day.
Thank you. Bye-bye.
Thank you. Thanks, everyone.